Hi, I'm Dan Huckabay, President of Commercial Surety Bond Agency. Our mission as a company is to help contractors grow and build their businesses. One of the main ways we do that is by educating contractors on the intricacies of surety bonds, and we've put together a series of videos to do just that. Here's our latest video. Welcome to our video on construction accounting methods and revenue recognition. You've probably heard the terms cash basis, accrual basis, and percentage of completion basis. Maybe you've been told by your surety that they can't accept your financials if they're on a cash basis, or maybe your surety has asked you to prepare your financials on a percentage of completion basis. We're going to walk through some examples to show you how the different methods of accounting can impact the revenue and profit you're reporting to your surety. And really, ultimately, the goal in this video is to help you be able to be in a better position to communicate your information to the surety, how you're really doing in the most accurate way, and to understand your own business better. At CSBA, we put a lot of effort and work into helping our contractors understand these concepts, because the better reflection we can provide to the surety company about how our contractor customers are doing, the better chances we're going to have for a successful relationship with the surety and to really maximize the bonding credit that the surety company is going to be willing to provide. So let's start by doing a quick overview of the different methods of accounting, and then we'll jump into some examples, because that's probably the best way to understand the dynamics with each of these and how they work. So with a cash basis, revenue is recognized when you receive the cash from your customers, and the expenses are recognized when you actually write checks or make payments for the expenses that you have. Accrual basis, on the other hand, you don't necessarily need to actually receive the payments or make the payments. It's more about when you bill or get billed. So when you bill your customers for the work that you're doing, that's when you'll recognize the revenue. When you get billed from your subcontractors or your vendors, that's when you would recognize the cost. As you can imagine, there's all sorts of timing issues that can happen either under cash or accrual basis accounting. We'll kind of look at some of those, but percentage of completion basis was developed in order to kind of correct and smooth out how the revenue is earned over time, and adjust for those distortions that can happen in timing with the other two accounting methods. So with percentage of completion basis accounting, you recognize revenue based on the percentage complete of the project, and the percentage complete of the project is determined by how much cost you've incurred divided by how much the estimated total cost is. So if you're 50% complete with a project, you will recognize 50% of the revenue. So let's jump into the example. Let's assume we've got a contract for $1 million with estimated cost of $700,000. That leaves you with gross profit of $300,000. And we're going to assume that you've incurred so far cost of $350,000. And based on the definition we just said about percentage complete, that means you would be 50% complete. That's the cost incurred divided by the total estimated cost. So now let's take those and look at the different types of accounting. We've got cash, which in this case, we're going to assume that you have billed but not received money yet. So let's just say you've billed $150,000, but you haven't received anything yet. And then on the cost side, let's say that you have both been billed $350,000 and you've also paid those expenses. So now you would be showing the cost of $350,000 because you've actually paid them. So for your gross profit, you're going to show a negative $350,000 because of the timing issue of receiving payments and when you've made those payments. Let's go over to the accrual method. You've got, like I said, you had billed $150,000. So with accrual method accounting, you will show that you have revenue of $150,000. You've incurred the bills or received bills for $350,000. So you've you will show those as expenses, and now you're going to show negative $200,000 of gross profit. Lastly, we'll look at percentage of completion. As I said, percentage of completion, the revenue is based on the contract amount times the percentage complete. So you're going to recognize $500,000 in revenue. The direct costs will remain the same, and then that leaves you with gross profit of $150,000. So you can see in this particular situation, it's really advantageous to be on the percentage of completion basis of accounting because it's going to show a much more accurate picture of how you're ultimately doing. Either way, the reality is you're doing really well on this project. You're making 30% and $300,000. But these two methods of accounting, depending on the timing of things, may not accurately show that, whereas percentage of completion is going to give that true picture. And that ultimately is going to help your surety company give you more bonds based on the fact that they're seeing a more accurate picture. At CSBA, we do have resources that can help you and your team, set up your accounting systems or be able to generate financial reports on a percentage of completion basis. So if you need help, please reach out to us and we'd be glad to assist. And that wraps it up for this video today, and we'll keep an eye out for additional videos that we have coming out on various topics relating to accounting and surety and expanding your bonding program. Thanks a lot for tuning in. Bye. We hope you found our video informative. If you have any questions or if you're interested in partnering with us to grow your business, please give us a call or shoot us an email using the Contact Us page. Thank you.